My sense is that the combined CBS Viacom has really some compelling content that will, on balance, make them to be, one of the potential winners down the road. That being said, there's still a lot of unanswered questions from the company in terms of articulating their direct-to-consumer strategy. Well, I think it's a continuation of a trend where we're seeing some of the major media companies try to gain more scale to provide a platform, perhaps to launch direct-to-consumer platform. The bigger you get, the more content obviously you have, and presumably the more leverage that you have when you're going to talk to distributors about distributing your content. That seems to be the way that the industry has been going, more and more scale, transition to direct-to-consumer. So that's what I would say is the main rationale for this transaction. Both companies separated, as you were referring to. At that time, I think the landscape was different. We didn't really have much of direct-to-consumer business at that time. The strategic rationale for getting more scale at that point was less justifiable than it is today. Since then, we've seen some fairly compelling combinations, whether it's Comcast, NBC, or a few others that have really, in the investor's mind, reinforced the potential benefits of gaining more scale. And we've seen the industry, frankly, get a little bit more disruptive and more contentious in negotiations between distributors and content providers.